Remember that whole Genesis thing we were talking about for the last few months? Well, we have a few more details on that. Though, to be fair, I don't think anyone in this 4 box is going to be able to explain exactly what's going on because there's a lot of bankruptcy talk in here, and we probably need Jen, our lawyer on the hash, to be here today. Fortunately, she is not. According to a new report coming out on February 10th, DCG, Genesis, and the main creditors have come up with an agreement on how they're going to divvy up Genesis rather, and deal with the bankruptcy. Genesis, of course, filed bankruptcy earlier in January, and it plans on exiting Chapter 11 bankruptcy this coming May. But as part of the process, they're trying to figure out who gets what money. According to this new report, they're going to equitize this 10-year promissory note, which was key and fundamental to the whole issue. This promissory note goes back to the Three Arrows Capital debacle that occurred in May of last year, where Three Arrows Capital defaulted on over $1 billion loan to Genesis Capital. DCG then assumed that liability. And now with Genesis underwater, DCG is in trouble because of that promissory note, trying to figure out what to do with that $1 billion hole. It seems like some sort of equity deal is in the play here. Of course, it's a little confusing because this is a bankruptcy and there's a lot of different companies involved with it. Gonna throw it up to Wendy. Please, please, please walk us through this. It's a little confusing.
Unfortunately, I am not capable of doing that because there's too many shell companies and I don't have a big enough space on the wall in front of me to do like a diagram to link it like they do in those true crime series and stuff like that. But if I did hear you say something about Three Arrows Capital, and I do believe that they were able to obtain funding for their new exchange, that they're going to be, I think they're tokenizing bankruptcy claims in crypto. So maybe they'll just do super well on that and it'll be very successful. And then the companies listed here will be able to collect on their claim that is owed to them. I don't really have any other explanation because it's a little bit messy, a little bit confusing. Zach, I did see your hand though.
Yeah, it's GTX baby. It's back. Anyway, yeah, I don't know. There is a lot of moving parts here. And obviously, I think the thing to note, first of all, I guess, is, DCG, Digital Currency Group, disclosure, CoinDesk parent company as well. So obviously, there's some downstream ramifications that could be impacted over on this side of the shop. But I will say, Barry Silbert, the founder of DCG, he got his start in bankruptcy law. So I'm way back when, in traditional finance. So I'm hoping he, paid attention and was good at that back in the day, because he seems to be bringing some of the chops from that world into how he's approaching this thing, right? They're sort of segmenting parts of the company into different parts into different companies, and then equitizing some things. Again, it's all complicated. There's some things that obviously are of value. There are other things that are obviously massively in the red. So I think what I'm seeing here is that by breaking them up into various components, there might be a better way to make the creditors whole. So that's sort of the big picture. Let's hope Barry knows what he's doing, because obviously there's a lot of money on the line, and especially in the case as it relates to the Gemini creditors, a lot of smaller people who are upset, while the Winklevoss twins who founded Gemini increasingly escalate their public stance on this feud. But yeah, Will, I'll toss it back down to you for this one.
Yeah, I'll throw in the lawyer speak so everyone can understand verbatim what we're talking about here. According to the CoinDesk article, it says that equitization means if the sales process does not result in the sale of all or substantially all of the assets of Genesis, a restructuring under the amended plan pursuant to which the GCGC creditors will receive, among other things, 100% of the equity in the reorganized business. So assuming that I understand what this is saying correctly, it basically means exactly what you said, Zach, that they're breaking Genesis down into different parts. Some parts of Genesis are fine. They have a lot of different parts. There's trading, there's lending. I think they work with a lot of different companies in crypto to keep their balance sheets healthy as well, like a treasury portion. So there's things that are actually above board. It makes sense, right? And they made a lot of money during the bull market. You cannot deny that, right? They did make a lot of money. And so they're probably going to break this apart and then sell those parts to other teams in the space. And then the stuff that's in the red, I guess you just have to take that on as a liability. Maybe DCG continues to assume this. The thing that is needed to be brought up here is the fact that if you're selling parts of this business, though, you're selling into a down market. So this is not going to sell the same way it would have a year or 2 years ago, right? If you're selling Genesis 2 years ago, this team would have made a lot of money because they had a really awesome team. They're able to bring in a lot of talent. And I remember all those headlines that we actually wrote a lot about, Zach, was that Genesis was picking up all these banking licenses or picking up all these different things to make them a prime broker. That stuff is important at some point, right? And now they're breaking this apart, though, so maybe it doesn't matter as much, and you're selling to a down market. It's going to be tough. Christy, can throw it over your take.
Well, I'm just sorry I'm not Jen, the lawyer, who could actually help out with this. So my commentary is a little more on the existential level, that I'm just sorry that this is something that is happening to such a large company that's been, kind of OG in the space, responsible for building quite a bit, building the crypto sphere, building Bitcoin, building up other companies that, benefited from the growth of DCG. And I think it's going to be interesting to see how crypto plays out after this. Where are we going to go? What exactly is going to be affected, and who's going to come out whole in the end and who's not? So I think that this is sort of a turning point in just the general overall building in crypto and the health of the ecosystem. So yeah, that's all I got to say about it. Because thank you for breaking down that last paragraph, Will, because I read it about 10 times and I didn't find it helpful. So.